Bloomberg Quint at the World Economic Forum's annual meeting here in Davos, and I have with me Steve Pagliuca, the co-chair of Bain Capital. Bain manages over $100 billion in assets across different classes. Steve, thanks so much for speaking with us here in Davos.
It's great to be here, Medika.
Let's start first with the global economy. It's not looking that bad, though there's been a minor downward, step down in the forecast by the IMF. And markets worldwide, in the US and in India, are close to record highs.
Yeah, the mood here in Davos is one of kind of more of the same. People are looking for 2020 to be like 2019. And there's some justification for that. We've done the phase one trade deal with China, so that's calmed down a little bit. The Mexico agreement, that NAFTA redo, that's calmed down a little bit. Brexit has a clearer, maybe not totally clear, but a clearer path. Record low unemployment in the U.S., 3.5%, low interest rates globally. So people are kind of looking for more of the same in 2020. I mean, there are some issues. I think the national debt in the U.S. is up to 22 trillion now, and that's a big number. Just 10 years ago, it was close to 10 or 11 trillion. But that hasn't been a problem because the interest rates to finance it are very low.
Yeah.
So if I see a risk, it would be, do we have a political blow up in the Middle East that affects oil supply or energy prices? Because the world has lived with, I would say, a great energy dividend over the last 6 or 7, since the crisis, a great energy dividend where energy prices are relatively low. So the conversation here has been interesting because it's not been so much about economics, it's been a lot about combining economics with sustainability and how do we protect the planet?
Okay,
as part of business strategy.
Yes, and I'll get to that in just a bit. But before that, there's also a political event this year in your country that's going to, have all of us watching. President Trump was here, and from all I could make out, his speech this year in Davos was much better received than it was 2 years ago.
Yeah, I heard. I wasn't here for the speech, but I looked at it, and people in Davos have said he was really on message, and he talked about some of his successes. So I'm glad it went well for the president.
So does it look like he might win a second term, and how does business view that?
I'm private equity and an investor. I haven't predicted any of the last 10 elections, and so we'll let the people decide that.
Okay. Let me come to India and the expanding of Bain Capital's interests in India. So, for instance, I think you have about $3.5 billion at work in the private equity space. Then you've got the stressed asset fund, and now you've also recently entered the credit markets in India. This is investing more faith in the economy of India?
I think India has, for the last 10 years, it has been one of the core markets for Bain Capital. It obviously is one of the world's largest economies. You've seen incredible growth over there. I mean, it's slowed down a little bit, but it's still twice the growth of most of the Western economies. And it has
a much smaller size.
But it has a great education and populous base, a growing middle class. So there's a lot of good things to be said about India, and I think they've made progress over the last 5 years.
So you continue to put more money to work in India. You're not discouraged by the 5% growth figure?
Well, 5% growth in India is compared to 1% in Europe. So everything's relative in the world. And at Bain Capital, we really have teams that look at businesses on a micro basis.
Sure.
There's one thing for GDP and all that. But in any kind of economy, if you invest in the right businesses that provide the right products or have a strategy of growth or exports or merging companies to make them better, you can make money for your investors and grow great companies. So we have a fantastic and stable, I think one of the most stable teams and fantastic teams in India. We've had that for the last 10 years. It's been just a pleasure. I've spent a lot of time there. It's been a pleasure to work with that team.
Steve, your largest exposure from the equity side is in the financial services business with your investment in Axis Bank and L&T Finance. What do you make of the difficulties that this sector, both the traditional banking sector as well as the non-banking sector, have faced over the last several years now, and the ability of the government as well as the regulators to respond to it in a timely, efficient fashion?
Well, look, all countries, as you know, with the crisis, all countries have had sporadic problems. In the U.S., it's been probably over 30 years. There's been 3 bank crises in the U.S. So banking is an inherently kind of difficult situation because you want to loan enough money to make the economy work, but you can't take so much risk that you're losing depositors' money. So when we invest, we like to look at a solid company like Axis Bank. Our thesis with Axis Bank is that we would fulfill a capital need that they had. And if you look at the banking sector in India, I think maybe 20 years ago, banking was all government banks, and now private banks, Axis, Kotak, they've taken 30% of the market share. And they've done very, very well. So our thesis with Axis is it's a very strong bank. The capital hole was filled. It has a fantastic management team. And India is still growing at 6% of the year, and probably banking should grow quicker. You've had a blip recently, but hopefully you'll come out of that blip. But that's not unexpected in terms of our business case. We thought there'd be a blip at some point in time. And that blip is managed by Axis being appropriate and conservative on loans, trying to grow their businesses. They're growing their branches, and so we're very happy with the investment.
Do you feel the same way about the non-banking financial sector in which L&T Finance works? Because I think that in the last 2 years, the stress has been a lot more
L&T
severe.
Finance has done fine for us, and I think we've gotten our capital, much of our capital back already in L&T Finance, and that's going to be a great situation for us. The non-banking financial sector is an interesting issue, and that's transcended many countries as well, because there wasn't as much regulation. They were more freewheeling, and they got reined in the U.S. with the new financial regulation, and I think they're getting reined in India. And India has a very sophisticated banking authority. We work with them on a daily basis, and I think that'll protect from that happening in the future. But I guess you have to kind of go through that then to decide, where you draw the line in regulations to now put them in a fold where you won't have those kind of problems.
Okay, so you believe we've done what we can to mitigate the situation in the last 2 years?
I believe they've acted reasonably aggressively to make the situation better, but in all countries it's an ongoing issue to stay out ahead of new technologies, of new ways of doing banking, and figuring out how to appropriately regulate that so you're not taking too much risk.
Okay.
It's a process.
Okay. It's interesting. I'm sure your faith stays sort of steady in the Indian financial services business, because I hear you're in the process of striking yet another deal in that sector with Max Financial Services. So are you?
Well, we can't talk about deals we're doing, obviously, but we do have a very strong financial services group globally, led by Phil Laughlin, and we're looking at opportunities all the time, but we can't talk about any specific opportunities. But WorldPay, we've done many successful deals in the financial services area. That's going to be a growing area with digitization and technology, and actually making services available to more people. So we're excited about it for now and the future.
Don't tell me if you're doing the deal or not, but can you tell me if you're keen to actually invest more money in the space?
We're never keen to invest money unless we see a specific great opportunity.
Okay.
And so every opportunity has to stand on its own merits.
And if you were to invest in another financial services player, would you look to merge it with L&T Finance in some fashion, or would you just be happy having 3 different entities on your investment portfolio?
I think it's very bespoke. We look at everything individually. If we find situations where things fit together, obviously we try to make that happen. But everything's bespoke in this business, and that's why it's a great business. We're trying to create what the U.S. they call alpha. We're not just moving papers around. We're actually trying to grow and build great companies. That's the fundamental tenet of Bain Capital.
Oh, they call it alpha in India as well. In an environment where markets are at record highs, how easy or difficult is it to achieve or make alpha?
It's difficult. But the great news is private equity has been able to do that in these kinds of markets and markets that are not good. If you look at the 35-year history of Bain Capital, a chart I love is that if you looked at every investment we made from 85, 86, all the way up until now, by year, not by fund, the lowest year, it was a crisis year, was somewhere around 2 times the money returned to investors. So maybe a little less than 2 times. So in 35 years, the average is somewhere in the mid-2s, 2.5. So that's a long period of cycles. That's a crash of 87. That's a 99 tech bubble, the 2008 crash. For 35 years, investors have gotten great returns from private equity. Why is that? I think it's because it is a necessary and better model for many companies. There's a misnomer out there that private equity is just in there to cut costs. That couldn't be, that is totally untrue. You don't make money unless you grow businesses. So we're trying to grow Axis. We're trying to grow LMT. We're trying to grow our companies in the United States. Canada Goose has grown from a very small company to a large company, making the world's best jackets, as I have here today. We don't need it in Davos today because it seems to be 60 degrees out here.
Yes, I know. It's really warm.
But so I'm actually heated up with it. But private equity it's all about growth, Bain Capital and other firms. And then specifically on Bain Capital, we've tried to develop vertical expertise and also functional expertise, digital marketing. We have vertical groups globally, focusing on retail consumer, focusing on financial services. So And then finally, the model itself, we're really owner-operators in partnership with management to grow companies. We don't have 12 people or 15 people boards. Everybody on the board is an expert. There's monthly and communications with management. It's not just go to a board meeting for a quarter. We help set strategy. We help with resources, as I said, digital marketing, strategic cases. And so we've built our organization of 1,000 people to really focus on how to grow companies and have no politics. It's all about a meritocracy, and it's all about delivering great products to consumers, whether it be financial services or jackets. So the proof in the pudding is the model has grown. I think right now, when I started, there was probably 10 private equity companies, maybe 20 globally. There's 4,000 today. When we started, we had a $36 million fund. We have over $100 billion now. So the model has really worked. Another interesting fact is in the U.S., I think only 15 years ago, there were probably 9,000 public companies. There's 4,500 now. Yeah. And private equity market caps in the U.S. are something around 4.5 trillion, and the stock markets are 35 trillion. So you've seen a penetration of private equity companies employing 9 million people in the U.S. and growth. The Bain Capital portfolio, for example, we did analysis. How many people do we have in the companies since we bought them till now globally? And it's over a million increase in people. So I think the bottom line is the model has worked, and the model actually has worked fantastically in Asia because people come to us, they want more than money. They want those strategies. They want those capabilities. So I'm bullish. I think we're only in the early stages of it. It's going to get even bigger and better as a model. The public model will always be there, and it's a good model for more stable companies. But companies that need to grow or invest or don't want to have quarterly earnings or need deep global expertise, private equity is a fantastic vehicle for that.
What's going to change about the way private equity goes about doing its work in this new decade?
Well, I think all of corporate America, all of corporate world will change, both India and America and Asia, because there's a focus of the next generation on sustainability, as there should be. Sure. There's a focus on with technology disrupting the world so quickly. It used to be cycles would last 10 or 20 years. Right now, cycles are very, very fast, and technology has probably lifted 1 billion people. The capitalism and technology, India, China, the U.S. has lifted 1 billion people out of poverty over the last 10 years. That's been great, but there's been dislocations in the Western economy. So I think corporate America, private equity companies, and private equity companies I think are out ahead of this, is you have to look at all the effects on all the stakeholders, and I think Jamie Dimon talked about it at the Business Roundtable. It's not just about return on capital, it's about return for people, return for the stakeholders, jobs and employment.
Yes.
And you're seeing, if I step back and in the beauty of Davos here, you're almost seeing a change in the world order, because if you go back, way back, 1,000, 2,000 years ago, the global GDP was dominated by India and China.
Yes.
And then in the 80s, India and China were maybe 15% of the global GDP, down from they were 80% of the global GDP, 2,000 years ago. Now the world order is changing. When you come to Davos, you see many Indian companies, you see Chinese companies. This didn't happen 15 years ago. This was more of a European-centric, U.S. agglomeration. So this changeover with WTO, explosion in global trade, we're at a very critical time now, and I'm hoping places like Davos can bring people together and say, let's put a set of rules in so that everyone benefits. That globally we raise the boat, and globally we work together to make sure we're not using up the planet.
We'll leave it there. Thank you, Steve, so much for speaking to us here in Bloomberg Quint.
It's great to be here.
And have a great rest of your trip here.
All right, I'm excited.
Thank you.